everyone, welcome back to my channel. So as I said in that video of mine that I will be talking more about it on this YouTube video about the candlesticks and this one candlestick that is commonly used in India. So basically let us start from the starting that why candlesticks are actually used. Now I've already said it in the video earlier, but people are, especially full-time investors, full-time traders, they are analyzing hundreds of stocks every single day. Okay, they are literally analyzing, they are predicting, they're putting their money in on over thousands and thousands, not thousands obviously, but hundreds and hundreds of stocks on a daily basis. And obviously they are not going to remember how the company acted earlier, how the stock moved in their last year, in their 2 years earlier, how it acted yesterday. Obviously they're not going to remember that, right? Now, if you go to tradingview.com, you can actually add these little lines on the stock, which can actually help you understand how the market acted earlier. So it is sort of like a bookmark, okay? So that bookmark, basically, if you're like reading two books every single day or maybe three books every single day, obviously you're not going to remember what has happened in the previous pages. So what some readers do, they make little notes on the side so they know what happened earlier so that they can move, they don't have to start over again. The same way traders use these little candlestick patterns so that they can, they don't have to research the company again and waste their time. They can just predict how the market ended, how the market acted based on the lines that they have already made while analyzing the company for the first time. So this is why candlestick patterns are really, it's, some traders don't even use that. They just, it's not important to use a candlestick pattern, but some people really do, especially if they're full-time investors. And this one candlestick pattern is very common in India, that is the hammer. The hammer, basically, let's dive into it because it's not something that I can just explain like that. So let us first understand. So candlestick will help you predict the buyer and the seller behavior. Now if you are someone who's been watching my videos, or you have stumbled upon that video where I explain the candlesticks, the color of the candlesticks and all that, or you are just a full-time investor, you know that green candles means that more buyers are interested in the company, more buyers have bought their stock, or the company is doing really well. And red candlestick means that more people are selling their stock, or they basically, the company is not doing really well, or there's something going on in the company that you've heard in the finance news, and that's why it's red in color. Same way, candlestick patterns also help us predict how the company, how the stock and everything has acted earlier and will act now. Now there's this famous saying in the stock market that is, history always repeats itself. So that's why candlestick patterns are important, because some people will just feel like, okay, the history is going to repeat. If the company is going down, after a few months it's going to go back up, this will be the right time to invest, blah blah, because history always repeats itself. So they know that the stock has acted this way earlier, it will act like this again, and this obviously needs tons and tons of research to be done. Okay, now let us talk about the hammer. Okay, now a hammer falls after a price fall. Okay, I will attach an image here to show how the hammer pattern actually looks on a stock market. Okay, now obviously, how how a hammer looks, right? It has a small body on the top, right, and it has a longer lower wick. Okay, now in very simple terms, I'll explain it to you, is that sellers pushed the price down. Okay, sellers pushed the price down, buyers stepped in strongly and pushed it back up. Understood in a very simple language, it means sellers pushed the price down. Okay, basically they sold it, they pushed the price down, buyers stepped in, they bought it and pushed it back up. So that forms the hammer. Okay, so the market is actually trying to say that, I tried to fall, but obviously the buyers did not allow it, because it tried to fall, but buyers simply just stepped in and bought it aggressively. So I wanted to fall down, but the buyers did not allow it. Now, in India, traders mostly use the hammer near support levels. Now, if you've obviously seen my support and resistance video, you would know what support actually means, right? So, a hammer alone means nothing. Okay, it actually means nothing. They only use the hammer near support levels. A hammer is not, it does not mean alone. Okay, so if you are analyzing a company, you see a hammer being formed, right? It doesn't mean anything. You have to wait for the next candle. You have to, you have to have patience, when especially when you're trading in the stock market. So you need to be extremely patient when it comes to the hammer candlestick. Just because it's a hammer candlestick, don't trade immediately. Wait for the next candlestick pattern to be formed, or wait wait to see how the market is acting the next day. Okay, so a hammer is a warning sign. Okay, it is not a confirmation, it is not something you need to be scared of. It's just a warning sign that you need the next candle to move up to confirm that the buyers are in control. So you need to be very patient with it. Okay, and the hammer works best near strong support levels and after a clear downtrend. Okay, and in sideways market, it loses its power. Remember that hammer shows rejection of lower prices, but confirmation decides the trade. Okay, if so, I'm just going to read the hammer definition from this book, The Guide to Technical Analysis and Candlesticks. So basically it says here, hammer, a small candle that has got a long lower shadow, which indicates that prices declined much during the day but pulled back sharply. That I explained it to you, right? That buyers stepped in and buyers bought the share. This candle, when forms on the top, is called hanging man, and when forms during the bottom is called hammer. This is the image that they are talking about. Okay, now there's an example that they've given, Bombay Rayon. Okay, prices opened lower in line with the continuing downtrend and traded to form a new low on 27th October 2008, but later managed to recover and close near the open with marginal decline. This formed a hammer on the candlestick chart. Okay, so this is what this book says. Formation of hammer indicates that the strength of bears for the current bearish move has exhausted and bulls are getting in control. Higher volumes give stronger signals. Okay, so I explained the same thing in much simpler terms, and that is what hammer candlesticks are used for. If you like this video, please like, comment, share and subscribe, so I can make more videos like this and try to explain it to you, and maybe do a live session one day. So go hit the subscribe button so that I can get there to actually teach everyone what finance is about.